So how is the question is, how is the format of financial statements? So the financial statements always have the title. Okay, to start with, the first financial statement you start with is a statement of comprehensive income, which is also called the statement of profit and loss. It is also called the statement of financial the financial statement, like the financial position. That's the balance sheet, but this one is a statement of comprehensive income, or the income statement. Abel has a question. What is your question, sir?
So I'm just asking if you have shown anything on the screen. I can't see anything.
No,
myself.
I haven't shown anything. It's a blank space. So
All
how
right,
is the title? It starts with the number one, the name of the business. All right, name of the entity. That's the format. Name of the entity. That is the format for the title. Name of the business. Then from the name of the business, it is followed by the name of the statement. Name of the statement. From the name of the statement, it can be the statement of financial position or the statement of comprehensive income. You also have the period, okay? The period. So usually the period is written with such examples. You can say for the year ended, right? For the year ended, you write the date, that 1st December 2022, for example. Okay, so how is the example of a consolidated? Let me show you now the consolidated title for the financial position. The title shall be, let's choose any business. Choose any business name. Sir Soza, choose the name of the business. Any business name.
Let's take for instance catering or cattle ranching.
Or the name of the business, like the name of the company, you know?
Okay. Let's take for instance LG Enterprises.
Okay, so you can say LG's Enterprise, LG's Enterprise, what? Statement of what? Of comprehensive income, or the statement of profit and what? And the loss for the year ended. For the year ended, then you write the date, okay? Maybe 31st December 2020, so and so, full stop. Is that clear? That's the title of your financial statement. So that is the business name. Then from the business name, you go to the statement, the name of the statement, and the name of the statement in this respect is the statement of what? Profit and loss, or the statement of income, which is also called the statement of comprehensive income for the year ended that 1st December 2023. Is that clear? I think you are fine with the title, isn't it? You will put the proper title on top of your statements. I've guided you on how you write the format. Then from there, you start with, have two columns here. You start with the sales. Now, sometimes you may not find sales on the trial balance. You can find the revenue. It's the same thing, okay? Sales or revenue, you can write here. It's on the credit side now. The sales have a credit entry, okay? Right, sales, then right here, put a figure here for the sales. Bang. Okay, this is just a format. Sometimes maybe the formats may need to be memorized a bit. You know, in accounting, you just have more of formats. Then you less cost of goods, less cost of what? Cost of sales, cost of goods, sales. What do you have? Under this one now, you just put some full colon because we have got some elements that form the cost of goods. And the following are the elements that form the cost of goods. Number one, the opening stock. Opening what? Opening stock. Now, opening stock is also called the opening inventory. Okay, right here on the debit side, it has got a debit entry. Maybe just let me just go back a bit, and so that sometimes from the sales you can have the sales return, which is same as you can mute your mic, whoever is making that noise. Okay, so Mr. Sangano. So Mr. Sangano, you are the co-host. You can always mute those people that come in the class without muting their mic. All right. So okay, you can less from the sales. If you have the returns inward or sales return, you can less what? Returns inward. Returns inward. Now, what is returns inward? Returns inward is also same as the sales return, okay? Sales return. What this means is that as a company or as a business, you have made sales, you sell something, then those people to whom you have sold those things, they have decided to return, okay? Probably those things, they don't meet their standard or something. They've just decided to bring back the things that you had sold. We call that the returns inward or the sales return, okay? So you should do subtract such. If you have such, you should subtract such from the sales, okay? You've seen that I've put the brackets. Now the brackets simply mean negative. You will not start putting negatives in your financial statement. Just put the brackets. We already know that in accounting, the bracket means what? Subtraction, right? Then from that, you have the net sales. What you remain with is the net sales, okay? You will have net sales. Yeah. Now, from the net sales, you can less the cost of what? The cost of goods. The cost of goods or cost of sales, like this. I'll repeat. So you have revenue. This is a format of a statement of financial, or statement of income. That is the income statement, okay? So how do you do the income statement? You start with the sales, you record on the credit side, you less the returns inward. That is if you are provided with that in the trial balance, and you remain with the net sales. Now, from the net sales, you can, let's see, the opening stock. Let's start with opening stock. Opening stock. Now, opening stock is same as opening inventory. In the trial balance, it shall not be written as opening stock. No, you just check the dates, okay? Look at the period that you're considering, and then there will be the date, okay? You will see the date that is actually of the period. That is actually the beginning of the period. That is at the beginning of the period that you are considering. That is the opening stock or opening inventory. It has got the debit entry. You enter there, okay? Then from there you add the purchases. You will add the purchases. Now, what are purchases? You know what purchases are. All your purchases, you'll be provided with such details in the trial balance. You record here, they have a positive entry. From there, you will less, what are you lessing? The returns outward, okay? The returns outward. Now, what is returns out is return. Is that clear? Purchases return is same as the returns outward. Now, what that means, that simply means that you have purchased some things as a business. Then you decide to return those things that you purchased. Okay, we call such an amount of goods the purchases return. Is that clear? So since you are lessing that, you are removing that from that, you have a negative entry. Okay, you subtract. Then from there, what are you going to have next? You will have you are going to have once you less the returns outward, you will add to that amount, you will add the carriage inward. You will add the carriage inward. Carriage inward to be added, okay, to the cost of sales. You add that. Now, what is carriage inward? Carriage inward is actually the cost that you incur when you're bringing some goods inside the firm, okay? They would include things like offloading costs, all the costs, some transportation costs, logistics around that. As you are trying to bring the things that you have purchased into the business, the cost you incur is called carriage inward. You will add it to the cost of goods or the cost of sales. And then later on, you will less the closing what? The closing stock. Closing stock, which is same as the closing inventory, right? Closing stock, like that. Then whatever you get here, because we'll be adding here, add opening stock, add purchases. Then from that sum, remove the returns outward, which is same as purchases return. Then you will add the carriage inward. Then you will less the what? The closing stock. The closing stock is just like the opening stock. It is not labeled that this is a closing stock. No. Usually they give that information in additional information. They say at the end of the period or by the end of, by 31st, so. Usually the closing date, it was found that the inventory was this much. As long as that inventory you find it is at the end of the period, that is the closing stock. So that is the one that you less from all that figure. The difference is what you will write here. Now, see that the difference, I write it this side, and it shall be subtracted from the what? From the net sales. Okay? You will subtract that from the net sales. When you subtract that from the net sales, I mean, this will give you one figure, or this will give you one figure, right? Then that figure is what you write here. Now, this figure shall be subtracted from the net sales. Then the difference you find is called the gross profit. Is that clear? Here you will find the gross profit down. Are people following? Am I logged out? It's just the format. I'm sure people, I'm trying to see, to suggest that people and assume that people are following. Hello.
You are clear, sir.
Okay, great. So what we have down now is the what? The gross profit. So we have seen that we have ended with the gross profit here. So we have the gross what? The gross profit. The gross profit here. Now that we have the gross profit, to the gross profit, you will add what? Other incomes. This is the format of the statement of profit and loss. Add the other what? Other incomes. Put the full column. Now, what comprises of the other income are the following things. You will check if you have the following. Commission received. If as a business you receive some commission received, that is an other income. All right, you add it to the gross what? To the gross profit. If you have received also what else? If there is rent received, not rent paid, there is a difference. Rent received, you will add that. then the reduction in allowance for receivables is an income. Reduction in allowance for receivables. The reduction in allowance for receivables is an income to you. Now, what does the reduction in allowance for receivable mean? It has got the other name. The other name is actually the provision for doubtful debt. Doubtful debt is the same thing, okay? Once you find the provision for doubtful debt, it is same as the allowance for receivables. One and the same. So in other literature, you will find allowance for receivables. In some other literature, you will find provision for doubtful debt. Once the provision for doubtful debt reduces, that decrease is another income. You will include it here. Abe, you have a question.
Yes, sir, just on that one, is it not the same as the provision for doubtful debts? Is it not the same as bad debts?
No, it is not the same, sir. Just as the name suggests, this one is just the provision. So just understand that the bad debt has not yet occurred. You are just doubting these people. It's just, let me make it practical. It's just more like you have some people that owe you, some people that they owe you maybe, let's say 15,000, okay? Someone owes you a 15,000. As they owe you a 15,000, this is what has happened. So what is going to happen is that when these people owe you that 5,000, that 15,000, some money, okay, some money, you are expecting a 15,000, but again, when you look at these people that owe you, there are some people that you are doubting. You're saying that, but if this one will give me money, I'm doubting, okay? Let us assume that the doubt that you have adds to 5,000, right? That's a doubt. So the difference that you remain with is 10,000. So you will be expecting how much? You will be expecting about 10,000 with this doubt. Yes, you'll be expecting a 10,000 with little doubt, but this part that you are doubting, that is called the provision for doubtful debt. Now, but bad debt, it is actually when the books have come to be closed, like the period has ended, your financial, you are there to close the books, but you find that there are some people that you have just given up on them, okay? You have just given up on them, you're like, this one, they won't give us. Like you are sure like they have failed to give you. That is bad debt now. Is that clear?
Yeah, very much clear, sir. Thank you.
Okay. Right. So the allowance for receivable is another income. So you add it here, you have total income. All right? Total income. Now, from the total income, you will less expenses. Less what? Expenses. This is the format that I'm giving you. So what you do when you go to the trial balance, you'll be just getting the figures. These details are there on the trial balance. You're just punching here, you're putting them where they sit. Just know which one is put, which one is put. As simple as that. So we have we are starting with we are lessing expenses. Less expenses. We have other income here. Less expenses. What about the background sound I'm hearing? Okay. Number one, under expenses, the following things, they form expenses. Anyone, like you can just mention now those things that you know they form expenses. Anyone, you can participate. What forms expenses?
Like costs incurred.
What do you mean by cost incurred? We have already removed the cost, sir, during the trading account.
Or I mean, maybe for the money that was used for maybe repairing something. Those are, I mean, electricity.
Okay, can you mention, say electricity and lighting, then the expenses have got a debit entry. Get that, okay? When you are entering them, they have a debit entry or expenses. Electricity and lighting, okay? Expenses. What else? Another person to comment on expenses? Hello? After electricity and lighting, what else forms expenses? Colleagues, most of you, I assume you're from the industry, you understand the business. You're from the business world. We know not the expenses. Okay. Rent paid is an expense. Okay.
I think repairs as well.
The repairs expenses, sundry expenses, general expenses, you know, those general expenses. In short, all expenses should be put here, including the following. These are key expenses that I want to mention. Let me put them in red. Depreciation, okay? Depreciation is an expense to be written here. Now, depreciation, the depreciation that you write in the profit and loss account is only that depreciation which has occurred in the period under concern. I'll repeat. There is that depreciation which has occurred during the period under concern. That depreciation, not the provision of depreciation from the previous period. No. Here we are just interested on what has occurred during this new period. That is the depreciation you write. And then for each of the assets, for each of fixed of non-current assets, you write them here. Then from there, you have got bad debt, right? Bad debt. Bad debt is an expense, and an increase in allowance for receivables. Okay. Remember that we said that a reduction in allowance for receivables is another income, isn't it? We add that. If it's a reduction, you add that and other incomes. But if it is an increase, it is an expense. You put it under expenses. Is that clear? If it is an increase, that increase is put as an expense. So once you do that, you add all expenses under concern, all of them. Okay, all the expenses. You add them here, you sum them, then you have the balance here. It has a negative balance because you have to subtract them from this total income of yours here. Remember, you had ended with total income here, right? That was total income. Subtract them from the total income, and what you will find is the net profit down here. It's the net what? The net profit. The net profit. So the net profit is here. So when you reach out the net profit, this is where the statement of comprehensive income ends from. Once you reach out the net profit, the statement of comprehensive income ends. That's the last part. So what I've just given you is the order and the format. You will understand that even that assignment I gave you, it follows the same format. All the financial statements, they follow the same format. So you can go through the format and try to reason around that. Put the entries correctly. Yeah. Yeah, maybe the only thing that can change here is that the adjustments that need to be made and additional information, but otherwise the format still stands the same. A quick recap on the statement of comprehensive income. I said you start with the sales. After writing the sales, you subtract the sales return so that you can remain with the net sales. So from the net sales, you can less the cost of goods. The cost of goods is made up of opening stock that has got debit entry. You add purchases, you remove purchases return, which is same as the returns outward. Then you add the carriage inward and less the closing stock, so that the difference gives you the cost of goods available, and you subtract that from the net sales so that you can have the gross profit. To the gross profit, you can add other incomes if at all you have other incomes. Then from that amount, you can remove the expenses. Once you remove the expenses, the difference you find is not the gross profit, it is the net profit. Maybe let me just be quick to underscore that even salaries are expenses, okay? Salaries of people are expenses. They should be included under expenses, plus many other expenses that you're going to find in the notes and as you read and as you keep on researching. Any question on the statement of profit and loss? Just a format. This is just a format. Here where I've been putting these stars is to put numbers, is to write. The numbers are there in the what? Where do you find them? On the trial balance. Go on the trial balance, you will find these numbers. Just put here and you are done. No suffering. Don't even need to suffer. All right. The last statement that I'm commenting on is the statement of financial position, right? The statement of financial position, just as said, like any other statement, it has the title, it should have the title. So you say the name of the business, the name of the statement, then the year, okay, the period. So you have the statement of what? Financial position, which is same as the balance sheet. By the way, the statement of financial position is same as the balance sheet. So get conversant with these names. So in case we ask you, we say prepare the statement of financial position. It is same as the statement, the balance sheet, please. You suffer not. Okay. So now, how does it start? It starts with non-current assets. That's the format. Current assets. Now, the non-current assets, they are also called the fixed assets. So sometimes the non-current assets are called the what? The fixed assets. And so what you do here, you record all the fixed assets. You less what? You less the depreciation. Of course, the total depreciation, both the depreciation from the previous period and the depreciation that is there in the profit and loss account, which have happened in the new period. So for example, you have premises, right? Premises here. Then from the premises, you can less what? The depreciation for the premises. You consolidate the depreciation. That one from the previous period, that one you find on the trial balance, plus the one that you've calculated in the statement of profit and loss. You add them, and then the difference you write here as the value of what? Premises. You have land as well. You have got furniture. You have furniture and fixtures as well. You remove depreciation, then the difference you write here. What else forms non-current assets? Another example of non-current asset. I've already given the premises and the fixtures, furnitures. What else thing? Any other thing form the non-current asset?
Vehicle.
The vehicles, the motor vehicles, right? Yes, the motor vehicles as well. The motor vehicles are assets. You remove the depreciation and you have that. Okay, in short, all the assets, the non-current assets. The non-current assets are assets that you are planning to hold as a business for more than 12 months. I think we defined those things in the second lecture in unit number 2. That is what we did. So you already know what they are, even examples, we talked about them. So from there, you consolidate the non-current assets, the total here for the non-current assets. After the non-current assets, you will write what? The current assets. Now, I'm following a certain equation that I gave you, which is the accounting equation. I said the accounting equation is the matter of the balance sheet. That is actually the backbone of the balance sheet. So the accounting equation says that total asset is equal to total capital plus liability. This is the equation format that I'm following, okay? Of course, the balance sheet, it takes two forms based on the form of the equation. You can still say assets minus liability is equal to capital, which means the structure of the balance sheet will change. But now the one that I have taught, that I'm teaching you right now, I'm using is this one, where assets is equal to capital plus liabilities. That is very necessary. So you have current assets. What do you have under current assets? Give me examples of current assets that we talked about.
We have
Sorry?
inventories.
The inventory or stock, right? And to be specific, closing inventory, okay? Closing inventory, that's got the debit entry. Then what else?
Cash.
Cash, the cash both at bank and cash in hand, the bank. You write that. What else? Receivables, right? Receivables, isn't it? The receivables, the trade receivables or the debtors. In other literature, you will find debtors, okay? The people that owe you as a business, those that owe you as a business, we call them the debtors. They form the account receivables, okay? What else forms assets? The prepayment, right? The prepayment. Now, prepayment simply means you pay in advance, right? Payment in advance of anything. Whenever you pay something for something in advance, you write that. I should be quick to underscore that under receivables, if you have got any bad debt, when you reach here, you have to subtract the bad debt, okay? Remove the bad debt before you record here. You can also remove that provision for doubtful debt. Remove all that, then the difference is what we record here. I repeat. On the trade receivables, you have to make sure that the value that you record here now does not have the bad debt and it does not contain the provision for doubtful debt. So you have to remove the bad debt, you have to remove the allowance for receivables, and the difference is what you record. Is that clear? Okay.
Clear.
When you sum all these things, you have the total current assets here. So now these are current assets. You have got you have current assets and the fixed assets. When you total everything, you have total what? Total assets. Okay. When you add both the current assets and the non-current assets, you have got total assets and you record there. Is that clear? Then from there you have capital. Since the equation is asset is equal to capital plus liabilities. So come up with capital now. The capital employed, you can say financed by. If you want, you can say financed by, okay? You can say capital. Where do you find capital? It has got a debit entry. The capital is there on the trial balance, okay? Check from the trial balance, there is always capital. So to capital, you'll add net profit. You can add the net profit. Actually, you know what the net profit is, isn't it? Remember that the net profit was just gotten from the statement of comprehensive income. You found the net profit from the statement of comprehensive income. So that net profit you found is what you record here, okay? The net profit. So it is very, very imperative that you find the correct net profit. Because if you find the wrong one, then just know that even your balance sheet shall not balance. Then to this, you can less what now? You can less drawings. The drawings are there in the trial balance. Subtract the drawings. Whatever you find is called the total capital. Okay? You record the total capital here. Record the total capital. So from the total capital, what do? We have liabilities now. So we have recorded the total capital. We know what forms total capital. We can now record liabilities. And we can write non-current, can come up with non-current liabilities. Non-current liabilities, those obligations that you have to meet as a company after 12 months from now. Non-current liabilities, usually we have loans. These are common. Mostly we have the loans, the bank loan. You write all the non-current liabilities here. After that, you can write now the current liabilities. So you can write the current liabilities. So we can start with the capital. You found the total capital, right? Somewhere here. Then you can have the non-current liabilities. Non-current liabilities. Non-current liabilities. The bank loan. The bank loan. Right here. Then from there you can write the current liabilities, right? Current liabilities. Okay. So under current liabilities, what do you have? What forms current liabilities?
Payables.
Thank you. Payables, right? Or the creditors. The payables, the trade payables have a debit entry. What else? After payables, those suppliers that supplied to you on credit, that is what form payables. What else? The accrued expenses. The accrued expenses or expenses owing. The accrued expenses are also accrued expenses. I think in the assignment that I gave you, they have more of such, right? Accrued expenses. Those are expenses that have already been incurred, but they haven't been cleared, right? You haven't paid for them. For example, you can have accrued salaries. Those are salaries that you have to pay, but you haven't just paid them as a business, okay? Accrued expenses. Add all of them and include them here. What else? Bank overdraft. Bank overdraft, all that, those are short term. And you do that. When you consolidate everything, you can add here the non-current, the current liabilities. Sum all the three. You can sum all the three, right? Add here, so that you can have total what? Total capital employed or total capital and liability. Somebody is asking about the previous assignment. Which one is the previous assignment? Okay, I'll handle that later. Okay, total capital. What you have down here when you add everything, okay? When you add the capital plus non-current liabilities plus current liabilities, you should get the amount that should be equal to the total assets, okay? And the name of this one is called the total capital employed. The total capital what? Capital employed, or if you don't want, you can say the total capital and the liabilities. Write down here, right? Okay, that's basically the format of the balance sheet that obeys this equation. Total assets is equal to capital plus liability. So when you add the capital plus liabilities, they should equal what? Assets. When that is equal, it means that the trial balance or the balance sheet does what? Balances.